This week, Ben and I are going to focus on some wheat discussion, along with an adjustment to the ethanol production, maybe some record discussion there as well. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Oh, it's going well today, Will. How are you?
I'm doing all right. It's an interesting time of year. We finally got a good rain earlier today down here in Texas, and I feel like it's maybe only the third time that's happened since I came down here in May. So maybe some fall grass coming my way. It's kind of
Nice. Good deal. Glad to hear it. It's starting to feel a lot more like fall. I think the cooler temps are supposed to return at the end of the week, or at least that's what the forecasts are for. And certainly, I think I'm kind of ready for it. We've had
yeah,
a very warm start to November, maybe is how
yeah,
I should say it. I don't know if warm's the right word. We've had a very mild November.
mild. Yeah.
Yeah, yeah, yeah. And so I think I'm ready for some cooler weather, some soups and
Yeah.
casseroles and
Well,
stuff like that.
let's see. This past week, I flew from Austin to Kansas City for the National Association of Farm Broadcasting convention. And when I stepped on the plane in Austin, it was 85. When I stepped off in Kansas City, it was 41. But it was such a refreshing 41. It was very nice.
Yeah, it's
But
been, yeah,
but
it's
to
been warm.
dive into some price adjustments, not too much was refreshing, Ben, on the market front. Looking at first that December corn contract down 1 cent at 4.29. December 2025, that farther out contract down 4 cents at 4.41. January soybeans down 13 cents at 10.09. Soybean oil on a cents per pound basis for December down 2.62 cents per pound at 45.52. Soybeans on a soybean meal on a short ton basis for December down $4.80 at 290.30. The 2024 wheat crop for December down 18 cents at 547. Cotton for December 24 down 3.07 cents at 66.62 cents. And then looking at that West Texas Intermediate Crude Oil contract up $1.17 at 69.21. So Ben, across the board, everything pretty much went lower except for input prices. What's your takeaway this week?
Yeah, if you're a row crop producer, these are the types of weeks you don't like seeing. Everything down across the board, and then energy prices higher. So, unfortunately, that's just kind of where we've been here for a better part of a week and a half, and I don't know if we're going to see a whole lot of relief anytime soon. So it just kind of this seems to be the pattern we're going to be in for a little bit.
Yeah, and really to break us out of this kind of pattern, we've been stuck in this for a minute. It's going to take something, I feel like something pretty major and some big movement. But some of the things that we have seen that have been kind of record setting, I guess starting today's discussion around some energy numbers, we saw a record ethanol production number, Ben. So, that's more on the energy front, but maybe a positive, maybe on the demand side there.
Yeah, absolutely. So certainly you teed it off well there. U.S. ethanol production came in at an all-time weekly record of 327 million gallons produced on the week ending November 11th, I believe, or November 8th. That was the week. Yep. And that's the most recent week of data. The way I look at this is, if you're wanting corn demand, more corn demand, which livestock producers always don't want more corn demand because it can mean higher prices. But it is nice that we get these co-products of dried distillers grain from ethanol production as well. But if you're wanting more corn demand, you're wanting your base to do well, and you're looking for alternatives or areas outside your base to kind of add on and be a supporting role. And so for corn ethanol, it's that 10% blend that we like to see as the base, and the fact that it's had a really strong year. We set the all-time weekly production value back at the end of July. We exceeded it here in November, and that's positive because then there's other opportunities to see additional demand come into the picture, whether they do or not, right? That's to be seen. But you want your base to do well. The other thing I would say about this is this happened when ethanol margins have been minimal. There's not a whole lot of profitability for ethanol producers at the moment. In fact, I imagine there's some facilities that are producing maybe at a small negative. And you can do that for a period of time, and we do see this over time. But what this tells me is that we're probably not going to see volumes at this level
Stay there for a while.
moving forward, right? Yeah, we're going to see lower volumes as we kind of work our way through November and December. I think part of the reason why volumes are as high as what they are right now is there is a lot of plentiful corn. And for the most part, ethanol facilities don't have anything to slow them down. Producers are willing to bring corn to the market. They've got time to bring corn to the market. We certainly don't see the weather, this warmer weather is actually helping, energy prices as well. And so
Yeah.
ethanol facilities are taking advantage of that.
Well, yeah, Ben, kind of what you were alluding to there. Fall, you do see kind of that lack of or drop in demand as people maybe aren't moving around doing stuff outdoors and traveling as much, but maybe a little blip of demand increase around the holidays. But looking forward, we also saw some record numbers on another front. Looking at the soybeans, looking at soybean crush at that NOPA report. Almost broke that 200 I'm sorry, what was it?
Million. Yep, 200 million bushels.
Yeah, the 200. Yeah, we're very close, but Ben, that would have been a record as well. Or was this 199 a record?
Yeah, that was a
Yeah,
single
so just
monthly
records all
record.
around.
Not only for the month of October, but the largest month we've ever seen on the soybean crush front. And I kind of joke here a little bit, like, yes, we were just below that 200 million bushel threshold, but we were 40,000 bushels off. And so, like, I think that's close enough that you can just round up and call it a 200 million
200.
bushel month. That would be my guess for at least NOPA members. The total crush will actually be higher than that because NOPA members don't represent all crushers. So we'll see a healthy, well above 200 million bushel, for the month of October estimate come out here in a couple of weeks. So very healthy. That alone was bullish to the soybean market. I think helped erase some of the losses we saw. The other thing that I'll just point out there is this was very supportive of the soybean oil market, even though we saw a weekly decline in soybean oil. This was also supportive and a bullish factor for that complex because even with the added and the extra soybean crush, soybean oil stocks still came in below expectations. So that month, the soybean oil demand for the month was larger than expected too, an all-time record for any month in that category as well.
Well, Ben, a couple of positives maybe there for corn demand and soybean demand. Whether it can be sustained any type of for any type of time will be yet to be seen. But on a totally different area, looking at some wheat, we've had some volatility within the wheat market. There's ongoing, obviously, tension in the Black Sea region there. Maybe some shifts will come with that with the new administration. And then also, looking at some fluctuations in U.S. production. So a lot of moving parts in the wheat front. Ben, what's the picture to you right now, looking at where wheat is and where it might be going?
Yeah, so I don't know how many producers were following the wheat market during harvest, but the wheat market has really gone on kind of a whiplash here over the last 2 months. We started the month of September basically where we're at today, and then we rallied the dollar on very dry conditions here in the Midwest. Concern about maybe lower acreage, the health of those plants heading into winter. We had the conflict in Ukraine and Russia. So prices rallied about a dollar per bushel. They've now fallen a dollar per bushel here as we've moved through October into November, and so a very, very kind of volatile market, big moves in that space. I often say that wheat allows some of the other commodities to move higher or lower as well. And so if you're a corn producer and that's you just produce corn and soybeans, you're probably sitting there saying, the drag or the declines that we've seen in the wheat market have certainly put a lid on rallies in the corn market. And I would agree with that. I think wheat is oftentimes a leader for corn and grain sorghum to move higher. The fact that it's declined, so conditions for U.S. wheat have improved. We saw another week of increasing conditions here in the United States. Still maybe a little bit below average, but better than where we've been the last couple of years at this time. I will remind our listeners that winter wheat conditions in the fall are not great indicators for yields in the spring. There's almost no correlation between.
No.
Yeah, there's like almost no correlation between conditions now and then the spring. But you don't, 2023 was a decent wheat producing year, but that crop was starting at such a deficit that we needed those spring rains and that perfect growing season in the early spring to really kind of get that crop to where it ended up. So it's not a great predictor, if you will, of spring yields, but certainly, plays a role.
Well, just going back to a little bit of what we were talking about before we actually started recording the episode here, I was asking about that 338 condition number or score for wheat, and I was like, that, is that kind of what we're looking at as a positive right now? And you're kind of going back to saying, well, I guess comparing into recent years, but it seems like it's still maybe not a strong indicator of where things could be.
Yeah, sure. So, I mean, let's just take the most recent 3 years. We're at 338 for a conditions index here in 2024. Last year at this time, we were at 333. So a little better than we were last year at this time. And for many states, and especially in the soft red winter wheat growing areas, very strong production. Then you go the year before, right? And we were well below 300 on that conditions index, down in the 290 range. So definitely an improvement from them. But 2023 wasn't a bad wheat yielding year. That was a pretty decent wheat year as well, especially for that soft red winter wheat. The hard red winter wheat not so much, but the soft red winter wheat definitely had a good year in 2023.
All right, Ben. Before we close out, I just want to briefly touch on some inflationary data. We saw the CPI and the PPI release numbers, and really what we saw from both the consumer prices and the producer prices is the inflation numbers have stopped decreasing. They've kind of flattened out. Ben, just a brief thought on what this could mean for the Federal Reserve and how they handle interest rates and different measures in the short term.
Yeah, this has kind of been a little bit of my concern. The Federal Reserve had switched its focus away from inflation towards the jobs market to kind of help reshore up employment. But dropping those short-term interest rates, I think, have potentially stalled the decline that we've seen in prices. And so, the CPI index, the producer price index, the trade data, retail sales data, all four of those measures came in at or above expectations and pretty much at or above where they were last month. And so, inflation is still higher than where the Federal Reserve would like to see it, pretty much, across the board, but there's certainly some categories that are struggling with this more than others. And, at least for the producer and consumer price indexes, we've basically flattened out here to where the declines have stalled, and it's going to be hard to get inflation to come back down to that 2% target if we continue to see month over month increases in prices.
Yeah. Someone say that it'd be impossible.
It's possible, yes.
Possible,
right. But maybe also improbable.
All right, Ben, looking to the rest of this week, what should farmers and ranchers be paying attention to that could move the markets?
Yeah, so it's a relatively quiet week. After the last couple, we get towards the Thanksgiving holiday break. However, we do still have a couple of reports. So on Friday, November 22nd, the Cotton Jennings report comes out. We have the cattle on feed report for November 1st. And then next Tuesday, consumer confidence comes out. So all of those are in addition to a lot of our regularly scheduled reports, but certainly things to keep us at least busy into the Thanksgiving holiday.
All right. Well, Ben, it's always a pleasure having you here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.